Well, I'm gonna ask the expert. Is the metal markets gonna be going down? Huh? That's a positive note. I think we hit the bottom, so it's probably about right. I don't know. I don't know. It's communist futures market. Oh, should I say capitalist futures market? That's futures market, spot market. It's almost like, I kind of alluded to it. I think I flat out said it. It's like the communist price controls, right? You wagging your tail. Well, time to go down, right? It's like the communist price controls. It's the futures market. What the hell does that mean? Let me put it this way. I saw something I think it was an article on here. Joe Weisenthal was one of the ones that wrote it. He goes, yeah, it's a good thing that gold went down, he says. Oh, really? I'm thinking, why? Let's see the logic behind this. He goes, well, it's because people are investing in a shiny yellow rock instead of investing in stocks where people produce goods. And I'm thinking, well, that makes sense in some ways, but it's not a good comparison because you're not comparing gold to stocks, comparing gold to U.S. dollar paper stuff and electronic money. Gold is something solid that you just can't reproduce and counterfeit out of thin air. But you can very easily with paper, especially if you're the man at the levers in the Federal Reserve, Mr. Ben Bernanke, right? Which I ain't got nothing against you. Actually, I said we'd buy you a beer here in the silver community if you get the price of silver back up to like where we expected to go, about $150 to $200 an ounce. So yeah, we'll take care of you. We'll buy you a case of beer every week, Ben. No problem. So, but anyway, a lot of things actually happened today, and I want to comment a little more about this futures market later. But there was these multiple deaths, horrible incidents that happened in the Boston Marathon today with explosions. I don't know what the deal is. What are you going to say? Iran did it? I don't know. I'm beginning to wonder, man. Shouldn't laugh about that, but it's freaking horrible. Especially, you're trying to be healthy and you freaking some bastard tries to. I don't know what's going on here. Is this a government cover-up conspiracy? I don't know, man. I noticed the internet, but I don't really know. Sometimes I wonder about this shit. Why the hell would anybody blow anybody up like that? Especially running up in a marathon. It's crazy. But they said that's why the markets tanked today. The markets in general, nothing to do with the metals, but the equities dropped like a couple percent, in the Dow. But the official reason the metals dropped so much, besides Goldman Sachs telling all their customers to dump gold and all that type of stuff, is the more conventional reason is that the Chinese came out with a lot poor expectations on their economy. So, somebody knows that these reports are going to come out. So what they do is they probably jump in the market ahead of time, start shorting it, and it starts an avalanche because there's a lot more leverage built into markets today than there used to be. So when something goes one way, it goes too much one way. Actually, when it goes up, it might actually go into a super bubble on the way up sometime too. But, if you look at the miners, actually, the miners aren't that profitable, especially the smaller silver miners. They're not that profitable. The gold miners are pretty profitable, but the silver miners aren't that profitable. But, let's look at the platinum miners. Because, Joe Weisenthal's argument was that gold is just a hunk of metal. But platinum's not a hunk of metal in the same way gold is, because most of platinum is industrial usage, just like palladium. Well, if the economy was so rosy, and that's why the stock market's going up, because there's so much productivity going on, well, how come the price of regular commodities that are used in industries like platinum, palladium, and silver aren't going up? It's quite obvious why. Actually, the platinum to gold ratio on long-term average is 1.4 to 1. Now, if you look during, that's average. That's averaging in when it's actually platinum is lower than gold. And actually in very bad recessionary times, platinum dips below the price of gold. Now actually right now it kind of changed because gold got such a bad hit. But platinum during good times or normal times, let's say normal times, not even really great times, but just normal times when things are going along good, is twice the price of gold. So even with gold taking a hit today down to 13 something, platinum should be $2,700 if everything's just rosy like Joe Weisenthal says. But it isn't. Actually, the stock market is actually being pumped up by the Fed. And you know, the other side of it, I said with QE, why they keep doing QEs, because they're getting real assets for nothing. And they get troubled assets, that just means the loan's upside down. They're getting something physically real that they got in there that's now on the balance sheet of the Federal Reserve, which is private banks and private individuals that are shareholders. They got something real that could be a income producing asset in the future, and they got it for nothing. They got it for paper, electronic money, treasuries they produced out of nothing. So they want to keep that going as long as possible. Now what they're trying to do right now is they want as much physical gold as possible. So, but ultimately, long range, there's going to be a bubble the other way in the metals, and they're going to go up too high. You know, if this actually is a good hard reset, they're going to go up too high, and you know who's going to get caught holding the bag? The middle class. No doubt about it. I just hope it's some middle class people that are like paper pushing piece of garbage or something, because a lot of those times there's people I don't like. But anyway, I want to say something about platinum too. Platinum actually in 2011, you know, just to see how skewed the markets are in the supposed spot market, you know, measured by the futures or whatever the hell's going on. You know, it's not a physical demand and supply type market that's making the price. It's this futures market. You know, let's just figure this out. Real simple, but it's all accurate. It's just plain 101 common sense, and that's all I'm giving you. Platinum was record demand in 2011, and then it broke that record again in 2012. Yet the price keeps dropping. Actually, in 2011, they had to take platinum out of stockpiles to meet demand. The mines were producing way short. So, like in 2011, the price went up, and it was dropping when they had to pull supplies out of stockpiles. Same thing with palladium. They did not produce enough palladium to meet demand. I think in 2011, with recycling, it was 8.5 million ounces. That's all million, not billion, not like 1 billion ounces with silver. 8.5 million ounces of palladium supply. Total demand supply, right? The whole thing. 2012 was about 9 million. That's including recycling, okay? So, why is the price at this level? I'm going to say something else too. If you want to know what kind of labor problems they're having in South Africa and Rhodesia and anywhere in Africa with the mines where a lot of platinum is coming from, major problems. They had strikes. The workers for the platinum miners went on strike, which are also palladium miners. Same type of deal is coming out of the same mine. They were actually killed by the authorities for going on strike. They were unarmed, and the authorities killed them, right? Now, there's not that many jobs in Africa, right? So if you're a miner and you're going on strike and you're getting killed and you're still going on strike, that's telling me your working conditions or something's really wrong with the equation about how much money you're getting. I mean, you figure that out. But you know, the financial people in New York seem to think that's too much money, because the spot price of platinum at that time was $1,700. It wasn't at $1,400. So figure that out. So why is the price going down? Is it because the miners are being paid so much money? They're living a life of luxury. They can't, you know, it's like, oh, we can't pay that much to these guys. No. And actually they had illegal strike after even the ones got killed, and they went and struck, they had mother strike after, you know, it was actually a legal strike because they supposedly met an agreement even after these workers got killed by the authorities. The company did a mass firing of 14,000 workers, 14,000 miners. All these mines. It was like a big mining strike all throughout the mines in Africa. So that's when the price was at 1,700 something. So what's the deal? So, the price has got to get lower because, you know, actually I'm going to tell you, you know why palladium is so cheap right now? You know why? Palladium and platinum should be about the same price. And actually, in a good economy, platinum runs about twice the price of gold. Sometimes it runs 3 times the price of gold. Sometimes even more, right? But in a good economy, on average, platinum runs twice the price of gold. But you know why palladium is so cheap? So much cheaper than gold? It's because the Soviet Union, from 1936 all the way up until Glasnost and Perestroika, used free slave gulag labor up in a mine in Norilsk in northern Siberia to mine it. And they had no market for it, and they stockpiled it. That's why there's a good amount of the price of palladium is down. There's rumors about stockpiles are depleted every year, and I don't know if I kind of doubt that, but we're getting down there a little bit. But the thing is, you know, they still say the price of palladium should be that much lower, even though it was mined by gulag slave labor for free, and they did nothing for the environment. As a matter of fact, one of the most polluted places on Earth is in Norilsk, Siberia. There isn't one tree growing within a 20-mile radius of this area because it's so polluted. So to keep the price of palladium down that low, they mined it for decades and decades and decades with free gulag slave labor to kill the workers. You know, they worked them to death. And they didn't care about the environment even at all. So because they got it's the most polluted place on Earth. And they stockpiled this stuff up for decades. That's the only reason it's that cheap. But somehow the Wall Street futures market says it has to be even lower. So let's just call the Wall Street futures market and those that control it the slave masters, because that's exactly what they are, weasels. You know, someday I'd like to just hand them a pick and lower them down into the pit and tell them to start digging, because I want you to get me some metals, because, you know, you got to work off some of that bullshit paper pushing futures electronic gizmo garbage you're doing up there in Wall Street. I'm stupid about this, but you know what I mean. The futures market is a load of it. There's so much garbage going on electronically. It's not setting the price due to true supply and demand. And platinum and palladium are the ones you really got to really look at to see that, because they are heavy industrial metals. If the economy was strong, they'd be using these metals up. And you remember, silver is an industrial metal also. Actually, in the industry side, the silver is a little bit down on the industry side. The coin side is way up. But the industry, overall, it's still got a lot of demand. And the other thing is, you know, it's like if the economy is cooking so strong, there should be a lot more industrial demand for silver too. But it's not. It's not. But actually, there is a lot of demand for palladium because of the automotive industry. Globally, the automotive industry is actually doing pretty well because it's hybrid cars are using more than average cars. They use 30% more. You know, also you got to, like, there's a lot of stuff. I mean, even though there's a slowdown in China, if you take all the different nations in the world, there's so much new middle class coming on board, even in Saudi Arabia, in, you know, the Middle East and other countries over there, more people driving cars. There's actually a lot more automotive production coming on, and about 60 to 65% of palladium usage is in the automotive area. As I said, even with recycling, the demand is exponentially higher. So, I'm not exponentially, but it's higher. The price should not be dropping. It's all futures market garbage. And like I said, the new thing that's coming up is the leverage in the system. There hasn't been so much leverage in the system in the past, so the market can react one way or the other. But just beware on the upside, because this actually is going to cause it to bounce. And I don't know. We'll see if Mr. Putin's right. I don't know. Originally, I was thinking that 24 and change price was going to be the final reset number last summer. Now it's hit 22 something. I know 22 is a major resistance point, but I don't know. I don't know, because it looks like we're dealing with manipulation for real. Because like I said, I pointed out, don't even look at silver, don't even look at gold. Look at what's going on in Africa with the miners, where a lot of platinum's coming out, and actually that's a good large source of the palladium too. I mean, damn, I mean, they're freaking killing these guys because they think their working conditions are so bad, and they're driving the price down even more. So what are you going to do? Like, make them pay to freaking mine? That they're going to have to pay the mines to, you know, maybe to do reverse salary? Is that what they're going to do? I mean, really? So, you know, when the Wall Street sharks tell you that the price of the metals is such and such, they're basically slave masters. I mean, they'll never get their fingernails dirty. Not in a million years. They don't pick up a hammer. They don't do nothing. They're paper pushing weasels. They act real nice. So, hey, we'll see. We'll see. But, you know, my plans, actually, I think I got cash for a while and all that kind of shit. But when my I think they'll, you know, the metals will go up, which in the brokerage accounts eventually. And I'm going to start, those will be the first things I sell off. But I think long range, what you're going to have to watch for with the physical metals is how much, because when I think the gains, they will come about at some point. They're going to come about. It's going to be the regulations that they're going to put on physical metals. I think that's going to be the thing that's going to be coming up, because you can see how tough and vicious they are in the futures market. I'm calling it a conspiracy. I think it is, okay? I think it's a conspiracy, man. The freaking futures market. It's the capitalist way that, you know, they fix prices. They use the futures market. You know, communists usually say they just issue a decree, you know? So, you know, here we have futures trading. Electronic, right? But we can't pay anybody, no miners, enough money in Africa, right? Even at higher prices? Anyway, that just tells me you're full of it. So, anyway, Mr. Wall Street, go to hell. I'll leave you with that. We're going to conquer you, buttheads, and we're going to, you know, someday the whole pendulum's going to swing. And, you know, I think Jim Rogers is right. The financial sector is in decline because it's losing the respect of everybody. Nobody trusts anybody in finance anymore. Nobody trusts financial instruments. Nobody's trusting banks. Well, not nobody yet, but they will. Because I think the next slide after this equities, the commodity slide, is going to be the equities. And that's when the majority of people in the United States are really going to wake up. But then it's going to be too late, because actually your safe haven is going to be the metals.